Good evening, friends. Let me pray and hope that you're all well and you had a beautiful day. So today we are continuing with our sessions. And in today's session, we are going to handle a new standard, IS 41, agriculture. It's IS 41 agriculture, but it is divided into biological assets and another section that we are going to look at. So you can write that title, IS 41. So this standard is also related, a little related to IS 16 and also IS 40, IS 40 and also partly IS 2 inventories. So, but mostly it interacts with IS 40, rather IS 16, property, plant and equipment, and also IS 2 inventories. So that's why I'm also presenting it immediately after those standards so that you can try to distinguish between those related standards. So we shall start with the biological assets. We shall look at what is the definition of a biological asset or biological assets, the recognition criteria, initial measurement, subsequent measurement, presentation, physical and price changes, so and also disclosure requirements. So like all standards, we shall start with the recognition criteria, get to know about the measurements. Initially, what do we do? Subsequently, what do we do? How do we present the standard? And for this particular standard, biological assets, we shall look at these two changes and distinguish them because they are also important in the accounting for these biological assets. So let's look at the key definitions. Please be attentive to these key definitions. They are highly examinable, but also, apart from being highly examinable, they help you understand the standards. They are very important in understanding this particular standard. So what is agriculture? Agricultural activity is the management of the biological transformation of biological assets for sale into agricultural produce or its additional biological assets. So friends, the way this definition is the way you present it when you're asked or when you're presenting your standard. It is the management of the biological transformation of biological assets for sale into agricultural produce or its additional biological assets. So from the foregoing definition, IS 41 provides definition for the underlined key terms. These have been given in the following slides. So which means that when you're asked to account under IS 41, you have to define agricultural activity, then go ahead and define biological transformation, biological assets, and agricultural produce to show the examiner that you understand this standard. You have to present these three. Actually, they are for the agriculture activity itself, biological transformation, biological assets, and agricultural produce. So let's see the definition of these other terms within the definition of agriculture activity. Biological transformation comprises the process of growth, degeneration, production, and procreation that cause qualitative or quantitative changes in a biological asset. So that process of that asset being having different changes. If it is a cow, its growth from being a calf to a mature cow is transformation. Yeah, so if there is any degeneration, maybe it has gotten some disease and it's not well. If there is any production from it, procreation, it has given birth, that cause qualitative or quantitative changes in the biological asset. Then we have another definition. The biological asset is basically a living plant or animal. So don't define or don't include under this standard a non-living thing. We are back to basic science, the science of primary school. What are living things? What are non-living things? So under this standard, please don't include non-living things. So it is a biological asset is a living plant or animal. It has to be living, which means if it is a plant, it is in the soil, still growing, still being nurtured by the soil. If it is an animal, it is still alive. Agricultural produce is the harvest product of the entity's biological assets. Agricultural produce is the harvested product of the entity's biological asset. Then harvest is the detachment of produce from a biological asset or cessation of a biological asset's life process. So if you're to milk a cow, that process of producing that milk from the cow, milking the cow, that is harvest. But even when the cow is slaughtered and you're going to produce beef, still that is harvest. That is harvest. So let me just give you some examples of biological assets and their produce. Biological assets and their respective produce. So we shall have you can note down in your notebook somewhere these examples. Biological assets, then the produce, agriculture produce that comes from those respective biological assets. So we have tree plantation, and you have felled trees, trees that you cut down. Then you have plants, different plants. Maybe you have harvesting cotton, sugarcane, harvested, or any other plants. Dairy cows, milk, pigs, for carcass. In fruit, different types of fruits you have harvested fruit. You have shrubbery, like tea, those shrubs like tea. You have leaves that are being harvested. You have vine, and you have grapes. Okay, and other examples. So these are just two. They just show you how they just show you how different these are. So these are just few examples of biological assets and their agricultural produce, their respective agricultural produce. So when you're done copying that, please let me know so that I go back to the slides. But before I also go to other slides, we can look at examples of biological assets, their agricultural produce, and the products that are a result from the processing of those that produce. So you can have also other examples here. Biological assets, agriculture, produce. Then we also have products. Products after processing the harvest. So we have also, we have sheep and you have wool here. Then you have a product like carpets, clothes, etc. Then you have plants You have cotton, roasted, sugar cane. So here the product you have thread, clothing, sugar. Then we have dairy cattle. So you have your milk here. Cheese. Uh, you have bushes or shrubs. You have leaves. You have products like tea and you add tobacco. You have vines, grapes, wine, cotton plant. I think this is the same as the other ones that we mentioned. Harvested cotton, thread, and clothing. Clothing. Then we have fruit, picked fruit, and now processed fruit, juice. Um, Rubber trees, wasted latex, and different rubber products. So those are some of the examples. Those are some of the examples of those biological acids, and they are agricultural produce plus the products. So when you're done copying that, please let me know so that I go back to our slides. So where is IS 41 applied? Or application, how is it applied? A farmer buys a dairy calf. The calf is a biological asset. The calf grows into a mature cow. Growth is a type of biological transformation. The farmer milks the cow. The milk has been harvested. Milk is an agricultural produce. So that is how IS 41 is applied. It moves in a process. A farmer buys a dairy calf, which is a biological asset. The calf grows into a mature cow, biological transformation. Farmer milks the cow. The harvested milk is an agricultural produce. So how do we recognize biological assets? The recognition criteria. A biological asset should be recognized only if it meets these conditions. It is probable that future economic benefits will flow to the entity from the asset. The cost or fair value of the asset can be reliably measured. And C, the entity controls the asset. So like any other asset under the other standards, IS 16 and also I think IS 41, like all those other assets, same for biological assets, these three conditions apply. These three conditions apply for it to be recognized as a biological asset. So let's go to measurement. Let's go to measurement. How do we measure? Initially, biological assets are initially measured at fair value less estimated costs to sell. So whatever, for example, you can purchase, let's use a cow. You can purchase a calf. The cost of purchasing that calf is mostly the fair value, the market value of that calf. If you're to move around the market, that is the market value, which is also the fair value. So that's why it is fair value all through. But it is, if you've just purchased the calf or just purchased that biological asset, that cost, less estimated cost to sell, is the initial measurement of that biological asset. But like I've said, we take fair value as the term because even the cost of that particular biological asset is the market value that it is running on in that particular season. So any gains and losses may arise in profit or loss when a biological asset is first recognized. For example, a loss can arise because estimated selling costs are deducted from fair value. A gain can rise when a new biological asset, such as a lamb or calf, is born. Okay, so you may go to the market, purchase this calf, but the costs of bringing it to its present location may be high, so it causes a loss. Then again, if of course the calf is born on the farm, you don't have any transportation cost, you don't have what, so there is a gain. There is a gain at that particular moment. So when the calf is born, you search around the market, how much is the calf costing as of present? Subsequent measurement, at each reporting date, biological assets are revalued to fair value less cost to sell. So which means at every reporting date, we go back to our respective markets and find out the market price for those biological assets. For example, if at the beginning of the year I had a newborn, maybe the year is running from 1st January to 31st December, and on 1st January I had a newborn. I will, at the end of the year on 31st December, I'll go to the market, find out how much is the newborn costing at that time, but also how much a 1-year-old is costing. Because I want to compare two things, which we are going to see as we move forward. The physical change and the price change. The physical change is because this calf has grown from being 1 day or newborn to 1 year. That is the physical change. Then the price change, prices always change. The same newborn, which costed maybe like 100,000 at the beginning of the period, then by the end of the period on 31st December, a newborn maybe is costing 400,000. There is also that change. So there are two changes that I'm putting into consideration as I'm going to the market. So any gains and losses arising from changes in fair value are recognized in profit or loss for the period in which they arise. So let's look at an activity. Let's look at an activity. Let's look at an activity. To help us appreciate. On 1st January 2019, a farmer had a herd of 100 cows, all of which were 2-year-olds. At this date, the fair value less point of sale costs of the herd was 100 million. So which means on 1st January, 100 2-year-olds had fair value less point of cost to sell of 100 million. Then on 1st July 2019, that means in the mid of the year, the farmer purchased 20 cows, each 2.5 years old, for 600,000 each. So there was an addition. They made some purchases. There was an addition. As at 31st December 2019, 3-year-old cows sell at market for 900,000. So which means when you look at this information, if these 100 cows were 2 years old on 1st January 2019, how old were they on 31st December 2019? That is the first question you need to ask yourself. How old? A 2-year on 1st January 2019, how old was it on 31st December 2019? Yes? Let me hope you're hearing me well. So Praise is saying 2.5. Really? Calculate again, Praise. Try to analyze. On 1st January, exactly 1st January, it was 2 years old. So 31st January, that will be after one year, 12 months. Remember, this is 1st January, it is the beginning of the month. By 31st January, that will be 1 month gone. Then Feb, then March, April, May, June, July, like that. So up to 31st December. So Crispus is telling us it is 3 years. Yes, that is true. 3 years. So friends, these scenarios, your examiner is going to bring such information. So you have to sit and calculate. A calculation of those dates and the years and the periods are very key for this standard biological assets. Okay. Then these cows that were purchased on 1st July 2019, each 2.5 years old. How old were they by 31st December? These 2.5 years old, purchased on 1st July, how old were they on 31st December 2019? 3 years, good. So which means this information that has been given to us that as at 31st December 2019, a 3-year-old or 3-year-old cows sell at market 900,000 each. Applies to all these cows, the 100 cows plus the 20 cows that they purchased during the year. But you can find a scenario where these cows have different ages. But for this one, it has been simplified for you. So market auctioneers have charged a sales levy of 2% for many years. So which means our cost to sell is 2% levy. So required discuss the accounting treatment, the accounting treatment of the above in the financial statements for the year ended 31st December 2019. So when you get to a question about a biological asset, always try to break down this information before you even attempt the question. Try to understand, especially the years. There will be a lot of information about the years and the period. So let's see how we attempt this. So, initial recognition and measurements. Let me see the required accounting. So when you're asked to give the accounting treatment, always introduce the standard. For me, I will not do it, but always introduce the standard. How do you introduce the standard? By defining the standard. And for IS 41, you're going to define agricultural activity, biological assets, biological produce, and what else did we have? Biological assets and biological produce and agricultural activity. You have to define those 3. Okay? Then you go ahead and give us the recognition and measurement. Recognition, you mentioned the 3 conditions. Measured reliably, economic benefits flowing towards the entity, and ownership. So initial recognition and measurements, cows are biological assets and should be initially recognized at fair value, less cost to sell. The purchased biological assets in the year should be initially recognized at 20 cows times 600,000 times 98%, which is the levy, less the levy. So which is 11,760,000. 11,760,000. That's how we recognize those additional cows that have been purchased. Remember the 100 million, we were told that one didn't have any problem. They had already made all the calculations. It was fair value less costs to sell. So there was no need of reducing the fair value by the 2% levy. But for these ones that we purchased, we had to incorporate the levy, the fee. So this will give rise to an immediate loss determined as follows. Total purchase cost, 20 cows, 600, 12 million less amount recognized, loss on initial recognition of 240. So this loss is taken to profit or loss. We expense it. We expense it. Loss on recognition is 240,000. So which accounting entries do we make? We debit biological assets account with 11,760,000 and we debit profit or loss account with 240,000 and credit bank or payables account by 12 million shillings. Bank if we have paid for the biological assets, the cows. Payables if we have gotten those cows on credit. Those are the two entries that we make. Gloria, I've understood a bit of the entries, but I've not understood what you need to know in your first text, in your first message. Do you want me to repeat everything? Or you have a particular area So the solution to this activity, I've told you that when you're required to account any standard, if you're required to account for that standard, required, discuss the accounting treatment of the above in the financial statements. This is okay. They are asking you for accounting treatment. They want the entries. But sometimes they can tell you to account for these in your books. I told you, first of all, you introduce the standard by defining it. The definitions that we gave you, agricultural activity, biological assets, etc., all those definitions. Then you go ahead and tell us, how do you recognize a biological asset? In case it is a biological asset, how do you recognize it? The 3 conditions for recognition of that biological asset, which are the same for most of the assets, that you can reliably measure the cost or fair value of that asset. Then there is ownership of that asset, and there is probability that there are economic benefits going to flow towards the entity from that asset. Those are the 3 conditions for recognition. Then you go ahead and present the other information, measurement, etc. But for this particular question, you're asked to give the accounting treatment, which means they want to know, what are you going to do in your financial statements about this information? So we have 100 cows on 1st January at 100 million. And this 100 million is fair value less point of sales of costs. So which means this is what we take in our books, the final figure on 1st January. But on 1st July 2019, the farmer purchased 20 cows, each 2.5 years old, at 600 shillings each. But remember, the examiner was silent. They didn't tell you that the 600 shillings was less the point of sales of cost. So which means the 600,000 is the fair value. And now we have to incorporate this 2%, because we've been told market auctioneers have charged a sales levy of 2% for many years. So this is our point of sale costs, the 2% levy. So initial recognition, we've introduced that cows are biological assets that should be initially recognized at fair value less cost to sell. And the purchased biological assets in the year should be initially recognized. Why we are starting with the purchase? Because already the ones that were existing had already their value in place. So the purchased biological assets are 20 cows times the 600,000 times 98%. Why are we using 98%? You could have done 20 cows times 600,000 minus 20 cows times 600,000 times 2%. But as someone who wants to ease in their lives, you don't need to go into all those details. So you just get the 100% minus 2%, which is 98%, to come to the fair value less cost to sell, giving you 11,760,000. So remember, we are told that on initial recognition, you get a loss when they are selling their cost to sell. Okay? So that loss is taken to profit or loss. Or you may have a gain where maybe the calf is the cow gives birth on the farm and the calf is there. You don't have any cost to sell. So in this particular case, we have a loss because these cows were purchased from the market and there was a levy fee. So total purchase cost, which is 20 cows times 600,000 is 12 million. Less amount recognized, which is 11,760,000. And the loss on initial recognition, which is 240. And that loss is basically 20 cows times 600,000 times 2% is that 240,000. So that is also another way of arriving to that loss. So the accounting entries, you will debit the biological assets account with 11,760,000, which is the initial recognition of that biological asset. Then also we shall debit profit or loss account with a loss of 240,000 and credit bank or payables account with 12 million. Why? Bank, that is, if you paid these guys, you paid them through the bank, or payables if you purchase those cows on credit. Because we don't know whether you purchased on credit or you paid cash. Where it is mentioned that they paid cash, you debit the bank or cash. So do you get it now? Or you're still lost? Okay, good. So now let's move ahead. Subsequent measurement. According to IS 41, at each year end, the whole head should be revalued. According to IS 41, at each year end, the whole head should be revalued to fair value. In this case, the revaluation shall be made as at 31st December 2019. Any gain or loss will be recorded in the statement of profit or loss. So thus the herd of cows will be held at the amount determined below in the statement of financial position. New value, 120 cows times 900,000 times 98%. Remember, this 900,000 is the cost of a 3-year-old at the end of the period. It is the cost of the 3-year-old at the end of the period. But also there is a 2% levy fee. So giving you 105,840,000. Why are we taking 120 cows? Remember, the first 100 cows were 2-year-old at the beginning of the period. So at the end of the period, they are 3-year-olds. Then the 20 cows were 2.5 years old on 1st July. So which means by 31st December, they are also 3-year-olds. So that is 100 cows plus 20 cows. That's how we are coming up with the 120 cows. So this will give rise to a further loss of 5,920,000. How is the loss coming about? You'll get the 120 cows, value as at 1st January 2019, 100 million. Value at 31st December, 840,000. Then we have new purchase of 11,760,000. And the loss is the balancing figure. The loss is the balancing figure between the 100 million plus 11,760,000 and the 105. Accounting entries, we shall debit profit or loss account with a 5,920,000, credit biological assets account with 5,920,000. Remember, these are subsequent measurements. That's why you're not going into the bit of. So this is credited against this biological asset account, which is this 100 million plus 760,000. So which means our biological assets account had a total of 111,760,000. It was debited by that by the time we finished valuing at the beginning of the period, at the time we valued those assets. But now at the end of the period, since we have a loss, we shall credit it. We shall credit it. So do we have any questions? Let me just share this with you on the group. I hope I can share that solution before we go to another part. Any questions? We are able to view. So I've shared the activity on the group. So let's look at another part of this standard. Let's look at another part of this standard. Another part of this standard. So we have agricultural produce. So Gloria, are you not part of the same group that I'm sharing information to? Esther, the 5,920,000. Remember, in the first place, you had a value of 100 million. Okay? Then you purchased 20 cows, and their fair value less points cost to sell is 11,760,000, right? Let me just demonstrate that for you. You had 100 cows at 100 million. Then you made an addition of 20 cows at 11,760,000. Okay? That is how much? $111,760,000. So this is what you had in your biological assets account. Okay? So at the end of the year, end of the period, all these cows had become 3 years old. These ones, remember, there were 100 cows, 2 years. At 1st January. These ones, 20 cows. Two and a half years. At 1st July. So by the end of the year, you had this value. But we are told every end of the period, you have to revalue. Subsequently, you have subsequent measurement. You have to go back to the market. You have to go back to the market and revalue your assets. You have to go back to the market and revalue your assets. Sorry, I hadn't shared the screen. So what I was explaining, you had 100 cows, 2 years at 1st January, costing 100 million. Fair value less point of cost to sell. Then you had an addition of 20 cows. This is an addition. An addition of 20 cows, of which we calculated that their fair value less points to cost to sell is 11,760,000. However, at the end of the period, we are told that 3-year-old cows costed 900 shillings each. Okay. So at the end of that period, these 100 cows were 3 years old. Then also these 20 cows were also 3-year-old. However, the 900,000 each, you have to always measure fair value less cost to sell. And we've been told there is a levy fee of 2%. A levy fee of 2%. So just put here some space. So which means if we have 120 cows, which are 3-year-old, at the end of the period, (31st December), the calculation is 120 cows times 900 shillings, 900,000 shillings, times 98%. Why are we doing 98%? It's because of this levy fee. Otherwise, you could have, for you to move around in circles, you get the 120 cows times 900,000, which is how much? I don't know. Minus 120 cows times 900,000 times 2%. But I don't want to move around. That it's the same thing as 120 cows times 900,000 times 98%, because I've already less the 2% levy fee, from which could have been the 100%, the entire cost of value of that biological asset. But since we've been told we value at fair value, this fair value less this point of cost to sell, this one, the levy fee. That's why I am doing this. So how much do you get? What is the value of this? What is the value of 120 cows (3-year-olds) at 31st December? $105,840,000. So the loss on revaluation is how much? The loss on revaluation is how much? Remember, this is the final value. At the end of the period, this is the carrying amount in your books of accounts. So this is, what is the loss on revaluation? 5,920,000. So Esther, do you get how we arrived to the 5,920,000? Okay. All right. So let's go back to agricultural produce. Agricultural produce. Agricultural produce. So we have the key definitions. Examples of agricultural produce, which I did already: recognition and measurement, presentation, bearer biological assets, and an exam type question. So let's look at the key definitions. IS 41, agricultural produce refers to the harvest product of an entity's biological asset. Okay. So I gave you that table where you saw the biological asset and its produce. So what comes out of that asset is biological produce. Agricultural produce, agricultural produce, not biological produce. Agricultural produce is diverse and may require further processing before ultimate consumption. Just as we saw, you have milk, then you process it further to cheese or pasteurized milk or UHT milk. You have beef, then you produce beef sausages like that. Just a minute. A farmer buys a dairy calf. The calf is a biological asset. The calf grows into a mature cow. Growth is a type of biological transformation. A farmer milks the cow. The milk has been harvested. Milk is agricultural produce. So, how do we recognize? According to IS 41, at the date of harvest, please, friends, I want you to pay attention. For agricultural produce, some of the things are going to change. It is not the same as biological asset. Some of the things are going to change. So please pay attention. Some standards are going to come in. So according to IS 41, at the date of harvest, agricultural produce should be recognized and measured at fair value, less estimated point of cost to sell. So what does that mean? When you milk your cow, that milk should be valued at fair value, less estimated point of sale costs. For example, if the liter of milk is 1,000 shillings, you value that liter of milk at 1,000 shillings less any cost to sell. Maybe if your cost to sell are 200 shillings per liter. So that will be 800 shillings. That will be the value of that milk at that very point when you have just milked that cow. That's what IS 41 requires of you. This is in line with the treatment of the biological asset from which the produce is harvested, which is also valued at fair value, less estimated point of cost to sell. So which means at this moment, we are like, okay, since this produce is related to what it is coming from, let us consider the same standard to value what is coming out of this asset. The biological asset is a cow. Milk is its produce. The cow is measured according to IS 41, fair value less estimated point of sales cost. So also the produce that is coming out of the cow milk, we are valuing it the same way. That is immediately. Gains and losses on initial recognition are included in profit or loss. The way we've done the biological asset, so which means I've used an example of a liter of milk. My loss will be 200 shillings as I'm valuing that liter of milk, and I will take that loss in my profit or loss. Then in my statement of financial position, or at that point, according to IS 41, I'll recognize the 800 shillings per liter. Okay? So what happens next? After the produce has been harvested, it becomes an item of inventory. Therefore, IS 41 ceases to apply. So immediately, we are using IS 41 when the milk is still warm. You've just milked the cow. Some of us are from those regions that rear cows. So I'm using that example of a cow because it's the easiest example to refer to. So even the milk is still warm, you valuing it is IS 41. But the moment you get it from that location, and maybe you store it in a refrigerator or put it in the cans or store it somewhere, it ceases. IS 41 ceases. And now we start valuing according to inventories, IS 2. So the initial measurement value at the point of harvest is the deemed cost of for the purchase of IS 2 inventories, which is applied from then onwards. So using that same example of milk, 1 liter, 1,000 shillings, fair value less cost points to sell, 800 shillings. When I cease to use IS 41 and I transfer to inventories IS 2, I'm going to use the same measurement of 800 shillings for IS 2. That is the cost I'm going to take for this produce. So my liter in my books of inventories will be 800 shillings, but according to IS 2. So the change in the carrying amount of the agricultural produce held at the year end, should be recognized as income and expense in profit or loss. So, which means that when I go to IS2, I'm going to subsequently measure according to IS2. So you need to go back to IS2 inventories and study, how do I subsequently measure inventory? After initial measurement, how do I go ahead to measure inventory? So any change in that amount, maybe when I measure subsequently my inventory at the end of the year, a litre is now 900 shillings. So that change from 800 shillings to 900 shillings, that is an upward movement. So I have moved upward by 100 shillings, that is income. However, if it is from 800 shillings, maybe to 600 shillings, I'll have a loss of 200 shillings, which I also expense in profit or loss. So how do we present? Agricultural produce should be classified as inventory in the statement of financial position and disclosed separately either in the statement of financial position or in the notes. So we have to, when we present inventory in our statement of financial position, which is under current assets, we have to disclose that this inventory is for biological asset A, biological produce, agricultural produce A, agricultural produce B. That's what this statement means. So let me hope that we've understood that first bit before I go to bearer biological plants, because this is also another dynamic coming in. Have we understood the bit of biological, rather agricultural produce? Have we understood the transfer from IS41 to IS2 inventories? Have we gotten that? Because your examiner is going to test you on that. They will want to know whether you can differentiate at what point does IS41 cease and IS2 come in. Okay. So now let's go to bearer biological assets. And also these ones, please pay keen attention. Pay very keen attention. Meanwhile, this standard IS41 agriculture is one of the easiest standards and it has the shortest numbers. But students fail it because of those small things like that. Failure to understand the standard makes the students fail that question. And sometimes some tutors are like, if you're not sure of agriculture, don't attempt it. But for me, personally, I find it as one of the easiest standards. If you understand it, you'll attempt that question within 15 minutes and you're done with it and you're done on the next question. And if it is set alone, most cases it has a big portion of theory and like halfway theory, halfway a question testing you on the standard. So try to understand those details, but the examiner will not make it easy for you. They know it is easy, but it is tricky. So they will try to bring in those tricks, especially what we've seen for agricultural produce. Where does agricultural produce cease to use IS41 to IS2? But also where we started from in biological assets, those periods calculating, a 2-year-old now is 3 years. They know that as students, by the time you're on level 2, whether CTA or CPA, somehow you're already tired. You don't have time for that nonsense. So they know you look at the question and you feel frustrated. So they'll try to twist it around with figures and different years. Yet, when you sit and look at it and analyze the periods being given, the moment you summarize that information, then you can ably attempt that question and move on to another. Now, pay attention to bearer biological assets. These are animals or plants that bear produce for harvest, e.g. dairy cattle, grapes, avocado trees, coffee, which other plant that is a bearer plant, mangoes. So those are the examples of bearer biological assets. It means this asset, it doesn't cease within one season. It's not like the way you see beans, that you're going to harvest your beans, you're going to plant your beans, within 3 months, you're uprooting the entire thing, getting off your beans, and burning or using the rest of the residue for manure. So these bearer biological assets last a long time. They last more than 1 year or many years. If it is a coffee plant or shrub, you're picking coffee from that plant year 1, year 2, year 3, year according to seasons. If it is a cow, it is producing for you milk year 1, year 2, like that. Grapes, a vine, it lasts I don't know how many years. A shrub, a tea shrub. Those who take that route of Fort Portal, you know those tea plantations. I think some of you, even before you were, all of us before we were born, those tea plantations were in existence. So those are the bearer biological assets. Now listen carefully. Bearer biological assets are not within the scope of IS 41. Now, do you see how this standard starts confusing you? You're like, okay, now we started from biological assets. You've told us they are IS 41. Now you're telling us bearer biological assets are not part of IS 41. So you have to pay attention to differentiate, and hence should be accounted for under IS 16 property, plant and equipment. Now IS 16 comes in. IS 16 comes in. It means upon initial recognition, you recognize fair value less cost to sale, as IS 41 tells you. But when you go in your books of accounts, this bearer biological asset, you recognize it like as if it is property, plant and equipment. Why? Because it is like an asset, like these other assets, the way you see land, the way you see buildings, you're using them over time. But however, agricultural produce from these plants continues to be recognized under IS 41/IS 2. The way we've seen in the previous slide. Now you're seeing one thing, one asset having 3 standards: IS 41, IS 2, and IS 16. That is the tricky bit about this particular standard. So how do you recognize that now I am recognizing this according to IS 41. At this point, it is IS 2. At this point, IS 16, property, plant, and equipment. So let's look at an activity. Let's look at an activity to make things easier for us. Let's look at an activity. You will need a lot of practice from your past papers for this biological asset. Like I've said, it is very easy, just tricky. So the more you practice and understand, the easier it is for you to attempt the standard. So activity 3, Karuchi Wines Limited is a company that grows and harvests grapes. The grapes are then sold to wine producers. Karuchi Wines Limited measures assets at fair value when permitted by accounting standards. Karuchi Wines Limited has one vineyard. On 1st July 2019, the land had a fair value of 200 million. The vines had a fair value of 50 million. On 30th June 2020, Karuchi Wines Limited harvested the grapes from its vine. The fair value of the grapes was 40 million. The fair value of the vines was 52 million. And the fair value of the land was 220 million. So which means you need to understand this year is running from 1st July 2019 to 30th June 2020. So all selling costs are negligible and should be ignored. Required, discuss the accounting treatment of the above in the financial statements of Karuchi Wines Limited for the year ended 30th June 2020 rather. So our year is running from 1st July 2019 to 30th June 2020. We have values, the fair value of land at the beginning of the period, which is 200 million. The fair value of the vines, 50 million. So which means at the beginning of the period, they hadn't harvested any vine, any grapes. So however, at the end of the period, they harvested grapes and the fair value of the grapes was 40 million. Then they revalued the vines to 52 million. And also the land was revalued to 210 million. So how do we solve this? Let's first look at the land. Land, this is accounted for in accordance with IS 16, property, plant, and equipment. If the revaluation model is chosen, remember, friends, before I go to that, IS 16 requires that initially you measure at cost. Then subsequently, you choose either revaluation model or cost model. Hopefully you remember that. So now, that's why we are saying if the revaluation model is chosen, the gains in the fair value and the land of the land should be reported in the other comprehensive income, OCI. So on 30th June 2020, the land should be revalued to 210 million shillings, and the gain is 10 million shillings, which is 210 million shillings minus the 200 million. This should be reported in other comprehensive income and held within the revaluation reserve in equity. So how do we post the accounting entries? We debit land with 10 million, credit revaluation surplus, plus OCI with 10 million. Hopefully we've understood that entry. This is according to IS 16, property, plant, and equipment. So that is the land. Let's look at another what? Don't worry, I'm going to share these solutions with you. The vines. The vines. The vines are bearer biological assets. Bearer biological assets are accounted for in accordance with IS 16, property, plant, and equipment. If the revaluation model is chosen, then gains in the fair value of the vines should be reported in other comprehensive income. So on 30th June, the vines should be revalued to 52 million and a gain of 2 million should be reported in other comprehensive income and held within revaluation reserve in equity. That is 52 million minus 50 million. Accounting entries, you debit vines account, credit revaluation surplus with 2 million or OCI. The grapes. The grapes, these are agricultural produce and should initially be recognized at fair value less costs to sell. Any gain or loss on recognition is reported in profit or loss. The grapes should initially be recognized at 40 million with a gain of 40 million reported in profit or loss. The grapes are now accounted for under IS2 inventories. They'll have a deemed cost of 40 million and accounting entries are you debit agricultural produce account 40 million, credit profit or loss 40 million. So you can see that the agricultural produce, we have recognized at IS 41. Then later on, we recognize as inventories. So because the information had already been given, that they had already done the fair value less cost to sell by giving you the 40 million, you didn't go into the measurements of IS 41. That's why we went straight to inventories. But in scenarios where you're given information, where fair value is given, then also the point of cost to sell are given, first recognize according to IS 41, then transfer that, deem that as cost in inventories. So let's look at other scenarios. Let me hope time will be on our side. Time will be on our side. So Jimmy Farm Limited established a commercial dairy farm in Mukono district, and the trial balance of the farm for the year ended 30th June 2020 is as follows. So we have a trial balance and it has everything. Cash 700 million, receivables 897 million, inventories 543 million, bearer biological assets 1,325,000, property, plant and equipment 3,456 million. Had payables, share capital, retained earnings, etc. Now, the farm had a herd of 500 two-year-old cows valued at 2.5 million each on 1st July 2019. Then on 1st October 2019, the farm purchased 51.5-year-old cows at a cost of 1.5 million each. These values have been recognized in the above trial balance. In March 2020, 100 cows calved and each calf was valued at 0.5 million or 500,000 shillings. The farm had not recognized these cows in its books of accounts. A minute, let me look for a PowerPoint. PDF is disturbing me. So, valuation of farm animals on 30th June 2020. Valuation of farm animals on 30th June 2020. Newborns, 1.7 million per animal. Two-year-olds, 2.7 million per animal. 1.5-year-olds, 1.6 million per animal. 3-year-olds, 2.9 million per animal. 2.4-year-olds, 2.8 million per animal, and 4 months old calves at 1.6 million per animal. The farm's policy is to depreciate plant, property, and equipment at 20% on reducing balance basis. So required in according to IS 41, prepare a reconciliation of changes in the carrying amount of biological assets between the beginning and the end of the period of the financial year 30th June 2020. Then also prepare the farm's statement of financial position as at 30th June 2020. So we are going to concentrate on part 1. How do we deal with part 1? So, like I've been sharing, when you read this information, always look out for the changes in the years of these particular animals or assets. Then this additional information that is given, especially at the end of the period, somehow gives you a hint on the years that are to be considered. Sometimes you may try to calculate the period and you're even confused. But if in the additional information you have newborns, you have 2 years, you have 1.5 years, you have 3 years, 2.4 years, 4 months, already you have hints of some of the ages that you're going to deal with. Now, there are 2 things that are going on, 2 changes that are happening in this scenario. 2 changes that are happening in this scenario. And I think I didn't, let me just go back to the previous lecture that we've gone through the slides. I might have missed out those changes after the other activity. No, I didn't. But if you remember, they were under the outline that we had, there was a bit of physical change and price change. That is what we are going to appreciate in this scenario. Physical change and price change. How do we deal? So this information that is being given to you here, you're going to look at physical change and price change. Physical change meaning maybe a calf that was a newborn by the end of the period is 4 months old. That is a physical change. Price change is what did the newborn cost on arrival and what is the newborn costing right now at the end of the period. That is the price change. So when we are attempting these questions, we first formulate timelines. You come up with sort of a timeline. In your working, you come up with what we call a timeline. And this is how you present it. This is how you present your timeline. After you've analyzed your information, you present your timeline under your workings, which means you will have left space for the final answer. Then you create space for your working. So our timeline shows that on 1st July 2019, 2-year-old costed 2.5 million or valued 2.5 million each. Then on 30th June 2020, the same 2-year-old, we are looking now at the years. The same 2-year-old, which was costing 2.5 at the beginning of the period, is now costing 2.7 million, and that is a price change. This is where our price change lies. However, this 2-year-old, which was 2 years on 1st July 2019, is now a 3-year-old. Is now a 3-year-old. And this 3-year-old is costing 2.9 million shillings. So the difference between these 2.9 million and the 2.5 million is a physical change. Is the effect of the physical change. And when we go to this 1.5-year-old that was purchased on 1st October 2019, the value was 1.5 million per cow. But the same 1.5-year-old on 30th June 2020 now costs 1.6 million. So which means when you go to the market at the end of the period of 30th June 2020, and you want to trade or buy or sell a 1.5-year-old, you will earn 1.6 million. So that is a price change. However, this 1.5-year-old by 30th June 2020 had become a 2.4-year-old. And a 2.4-year-old is costing 2.8 million shillings on the market. So this difference between the 2.8 million and the 1.5 million is the physical change. Is the physical change. So let's look at the newborn. The newborn. The newborn on 1st March 2020 was valued at 500,000 or 0.5 million shillings. However, a newborn at the end of the period is valued at 0.7 million. So which means that if a cow was to give birth at the end of the period, which is 30th June 2020, that calf, which has just been born, is valued at 0.7 million. So that is the price change between 0.7 to 0.5. However, the said newborn that we carved on 1st March 2020 is now 4 months old. And at the end of the period, a 4 months old calf is 1.6 million. So this is a physical change. It has come from newborn to 4 months. So the difference between 1.6 million and 0.5 million is our physical change. So friends, when we are valuing biological assets, we always put into consideration these two changes: the price change and the physical change. The price change and the physical change. They are all put into consideration. None is left behind. So when you're given such a scenario, first summarize by creating a timeline that we have done here. And this timeline is going to make your work easier in the revaluation of this biological asset. So we shall have a title: Jimmy Farm Limited, reconciliation of changes in the carrying amount of biological assets between the beginning and the end of the financial year ended 30th June 2020. So I beg to stop here so that I don't start on this question and I stop midway. We shall start from here, then continue to a new standard. We shall work out this question and another question which I'm going to share with you on the group. So do we have any questions before we close off the session? Any inquiries?
I'm kindly requesting you share the notes into the BA group too, because some of us are not in the other group where you're sharing information. All we are getting are linked, so we've never gotten any notes that you've shared, except the ones that are on the portal.
Okay, all right. I'm going to work on that. So Praise, are you also on the BA2 group? All right. Okay, let me follow up on that. Have a good night.